Even though this week there were 9% more newly pending home sales than the same week a year ago, home sales are ticking down now for the season and look weaker than they did in October. Mortgage rates continue to move higher, and that's impacting buyers, of course. I'm watching the data now every week for that slight bump in market momentum that we got a couple months ago. Will it be sustainable into the new year, or are we hitting the brakes again? We have a lot of signal already for the 2025 housing market. At HousingWire, we just published our comprehensive 2025 housing market forecast paper. In it, we look at home prices for 2025 and at home sales volumes for the coming year. After 3 years of housing market freeze, will we finally see sales grow in 2025? And as inventory builds, will that be enough to push home prices lower? So you can get that research at HousingWire.com. We'll include a link in the description below to get all the details and an investigation of the scenarios, like are the conditions that trigger home sales to surge next year? Or what are the conditions that might result in home prices declining? Tons of insight in that paper. Link in the description below to get it. And this week's data is yet another step into the insights of 2025. Today, I'll share what we currently see and what we can already see for 2025. So that's why at Altos Research, we track every home for sale in the country every week, all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the data in the middle of November 2024. There are now 722,000 single-family homes unsold on the market around the U.S. That's a tiny bit more than a week ago and almost 27% more inventory than last year at this time. So inventory peaked for the 2024 calendar year back in October. And in most of the country, the number of unsold homes on the market is moving lower for the season. Many Florida markets still have inventory building. Florida's on a different home buying seasonal pattern than the rest of the country and has had a particularly crazy housing market year. So Florida's always a state to keep watch on. This is a 10-year view of inventory trends in the U.S. These are the unsold single-family homes on the market over the last 500 weeks. It's wild when you realize that we've now been past the pandemic housing boom longer than we were in it. So you can see the recovery of inventory over the past 3 years, and that we probably still have a couple more years before we fully recover the unsold inventory levels that we used to have in the last decade. So it took just 2 years of ultra low rates to eat up all the unsold inventory and probably 5 years for it to rebuild. Now, I mentioned last week we published the HousingWire 2025 market forecast. So that's available at HousingWire.com. We'll leave a link in the description below so you can get that. One of the conclusions of that report is that we see inventory growth in 2025 again. So we see about 17% more homes on the market by the end of the year next year. That'll get us closer to the old levels of unsold inventory, and it'll require some of the Midwest and Northeast markets to finally add some homes for sale. We don't see another 30% gain in inventory like we had this year, though that is possible if mortgage rates power higher from here for much of the year 2025. One way to know that inventory nationally isn't on the path to grow faster than 17% is that there still aren't enough sellers to get there. This week, there were 52,000 new listings for single-family homes unsold. That's 6% more than last week and nearly 7% more than a year ago. When we add back in another 7,500 new listings immediate sales, those are already in contract and not adding to the active inventory. So overall, that's just 3% more sellers than a year ago. In order for inventory to grow 17% in 2025, we need to average more sellers each week than we had in 24. So year to date, this year, 2024, we see 7.5% more sellers on average each week. And that's what we track in this new listings data. So as of right now, we expect that growth to continue in 2025. But the last 2 weeks actually underperformed with fewer sellers than needed. So that's something we're watching closely. Are there enough home sellers each week? In this chart here, you can see the red line is the weekly new home seller listings, new listings count for 2024. We want this line to move higher into the gray lines from the past years rather than bouncing along the bottom. Frankly, it feels to me like the market is contracting a bit now in November. After the hurricanes, we got hit with spiking mortgage rates and a crazy election. We saw a little rebound in the new listings rate this week, after the election breather week, but it was actually less of a rebound than I expected. A few more sellers emerged, but my gut says that many are done for the season and maybe will wait to try again next spring. So there's one more week before the Thanksgiving holiday, so inventory and new seller volume could in fact tick up again before next Monday's data report. There will be a big drop for the Thanksgiving week and then a slight rebound in sellers listing in early December. The question is, will it be enough? We counted 53,000 new contracts pending for single-family homes this week, with another 11,000 condo sales. So that's a bounce up of almost 3% for the week after that election week pause. We discussed last week how this was likely to occur. The recent average for single-family home sales is down to 56,000 newly pending single-family home sales per week, 56,000. Home sales are averaging almost 10% more than last year. October of 23 and November of 23 was really weak for transaction volume. So yes, it is better now, but there are not a lot of homes being purchased right now. And like the new listings volume, the trend is weakening now with higher mortgage rates that we've seen this fall. So there are no signs of those mortgage rates abating either. Overall, for 2025, we are still forecasting slight growth for home sales, probably about 5% more home sales next year than in 24. So in this chart here, I've used a 4-week rolling average of home sales to smooth out some of the weekly noise, but you can see that sales are running just a bit ahead of last year. The dark line here at the right end of the chart, and it's above the red line. So the sales are declining for this season, but a little bit higher than last year. So this shows us that there's not a ton of growth here, 52,000 new listings this week and 53,000 sales. Not super optimistic. The median price of the sales started this week is $380,000 again. No change from last week. The new listings bounced up, inventory ticked up, sales rate improved, but the price stayed unchanged. Home prices by this measure are about 4% higher than last year at this time. So in this chart here, you can see the median price of those newly pending home sales and how it came in again at $380,000 this week. This year's curve is the dark line at the top. I expected a little uptick in prices. So maybe this is a little signal of buyers reacting to higher mortgage rates. The median price of the newly pending home sales has been 3 to 5% more expensive than in 23. And so you can see here at the last year's curve here in the red. The median price of all the homes on the market is now $430,000. That's down 1.1% from a week ago. It is about 0.5% higher than a year ago. Sales prices for homes have been holding up better than the asking prices, which I think is very interesting. So this year, lower priced markets like Florida and Texas have gained inventory. So that is what helps keep a lid on the asking price appreciation nationally, even when the price point that people buy inches up. In the HousingWire forecast publication, we shared how normally home prices would climb about 5% each year. Home prices normally climb that much each year because our economy grows, our population grows, and we tend to underbuild. And that's why it's so hard for home prices to outright fall, even when sales are down so dramatically as they have been for nearly 3 years now. And this year is no exception. So when home prices are coming in about 5% above last year, our forecast for 2025 is slightly weaker in pricing than 24. So we're currently expecting 3.5% home price gains for the calendar year of 2025. This is a view of list price reductions that I don't think I've shared before. Normally, we talk about the percent of homes on the market that have taken a price cut. That percentage has peaked for the year and is now 38.8% of the homes on the market that have taken a price cut from the original list price. That portion barely moved this week. It's been about 40% for a couple of months and is inching down, but isn't really giving us any new signal to watch. So I thought I'd look up the magnitude of those price reductions. So rather than the percent of listings, let's look at the dollar amount, how much those listings need to cut the price, and see if that gives us any new information. And this is kind of cool. Check it out. So currently, home sellers are taking a price cut, have dropped their their list prices by just over $15,000 from the original list price on average. If you think about the median home price in the US, which is $430,000 now, that's a 3.5% price cut, which makes sense. So if you're a seller, that's enough to move the needle for potential buyers. But look at this yearly comparison. The weakest time recently for home prices, with demand plummeting, was the middle of 2022. That's when the market shifted from pandemic craziness to post-pandemic dead. In the middle of 22, the percent of sellers who had to cut their prices was skyrocketing, and so was the dollar amount. So see the red line right in the middle of the chart, and that peaked at $24,000 price cuts, 24 grand, which was over 5% of the list price at the time. So I highlighted that gray section right there in the middle. Or look at the far left of the chart to January 22, which was the opposite. That was when we were in the heat of the pandemic frenzy still. At the left of the chart, we can also see prices improving in January 23 in that red line. After a rough Q4 22, sellers felt better about their prospects in January 23, and you can see it here in the red line. In this chart, we have the absolute level of price cuts to watch, the dollar amount, and the change in that amount. And right now, fewer dollars are being cut, and it's declining for the season ahead of the last 2 years. So this is another signal. So I'm looking at the dark line right here. This is another signal for home price stability as we look forward into 2025. If you're of the view that home prices are going to crash in 2025, or even correct down, I encourage you to look at signals like this. We currently see home price stability. Now, this metric can change direction quickly, and so if price corrections are coming, we will see it here quickly. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you dive into the local market and start helping people understand the market today. Link below, click that, join us. See you soon.